The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. This is Wednesday. This is Tuesday, December the 18th, and it's a pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock until noon at 877-927-6648. Now, I've been talking about a pattern that I've, how can I say, worked at, studied? I actually discovered many years ago, back in the mid-1980s, when I used to hand chart. Sounds like back in 1906 in the horse and wagon. Anyway, so and it's a pattern that I refer to as the stork leg. Maybe I'll get into it, maybe I won't. I'm mentioning it again because I don't yet have the chart formation itself, but the psychology of the stork leg is what is very important. What is the psychology of the stork leg? It is where there's a very, very strong buy signal, and then just about every single pullback gets met with buying, as the bears constantly have to cover, and the price keeps going higher. And even when there is a pullback, it's a fairly shallow pullback, and it holds something very important. It could be the 9-period exponential moving average, whatever. Now, I don't have the pattern, but absolutely throughout the end of November into so far December, we have just seen, you can look at the Dow chart that you could be following right now if you're looking at Tiger TV, and you will see that there is a pattern that's forming that says if the declines last for no more than 1 to 3 bars, in this case it's a daily, and then there's a new recovery high, and the new recovery high is still met with buying, and the pattern doesn't form either an arch formation or a flat formation, then what you have to look at is the possibility of an even more extended up move. As I say, that's the psychology thus far, because even when there's been some bad news out there about maybe no deal, the market's only pulled back a little bit, and very often it's been intra-bar or intra-hour or before the market opens. You've got all this stuff going on. So this is very important, because what it's saying is, if you are long and those particular stocks are working out well, then you're in the right position for this particular phase. If, on the other hand, you're long and the prices are pulling back, you could be wrong. For instance, at this particular point, the interest sensitive, when you're looking at bonds have pulled back very sharply. So I just want to do this, a little preamble. I'm showing right here. This is what my subscribers get every single day, a very comprehensive at the look of the Dow without anything more than the 9-period moving average, and then arches, cups, straight lines, whatever it is, but no moving, no stochastic or MACD. I then show another chart, today I did, of the triple. The second time I showed the triple time frames of the daily, the weekly, and the monthly. It's really key. Now, I'm going to forget, so I may as well just mention it right now. Tomorrow night, Wednesday night, is going to be the annual birthday of the investors, the Boston Investors Group. And that's the spin-off from the Investors Business Daily crowd, a lot of the same people. But they've just changed the name because I like to have guest speakers that are not Investors Business Daily representatives. In this case, it's me. I'm the guest speaker tomorrow night. This is the annual birthday bash, so if you want to bring some cookies and stuff, there'll be food there, and we'll have a little celebration. And congratulations to Jeff and Doug for doing such a great job. And then what will happen is at 8 o'clock I give a presentation. This one usually lasts until it finishes. We go on until the eyes get a little bleary. And it's over at MIT in Cambridge, Mass, building E51, room 315, 17 Memorial Drive, Cambridge. And that's the corner of Amherst and Wadsworth Streets. And it's, as I say, it starts around about 7-ish and with food and soft drinks. And then at 8 p.m. I will give the talk. And I'm really looking forward. I love meeting you all there. And we just have a great time. So with that said, thank you, Steve, for 2 great hours. Coming after me is the option hour. Oh, that should be really good. What a nice time to be doing an option hour because of all the cross currents going on. And we've got, let me see. Okay, and then we've got Daryl Martin, and we've got Dave White, and we've got, is Daryl on today? Am I getting things mixed up? Anyway, we've got Dave White, and we've got Ken Shreve, and then Tom O'Brien wraps it up at 4 to 6. Now, don't forget, this is the last day of the Tiger promotion. This is a fantastic promotion because the Tiger family needs time to be able to put together all the different accounts and whatever to be able to give their fantastic donation over to the Salvation Army. And this is just a perfect time. Go to the front page. At the same time, when you're at the front page, please check out I'm going to be keeping this going through December, just because it's been a very favorable response to it. This is the Save 50% on Basil's CD book called Introducing the ChapmanWave Methodology. Not only that, I'm throwing in a month of my opening call. I want you to see how it actually works so that while you're studying, you're also participating, hopefully making money. We've got 6 positions. I'm really nervous. When I get to 6 long positions, we are real close to some kind of a pullback. So we've got 6 long positions. All of them are up good percentages, really good percentages in some cases. I'm just checking right now. We've got 1, 2, 3, 4, 5, 6. All 6. Yesterday when I mentioned at this time, all 6 were up. Today I'm mentioning the same thing. All 6 are up at this particular time. So this is just a fabulous choice for those who did my webinar, and for those who have just signed up and got the CD and have started my opening call. I hope you picked up our buy yesterday, because that is up 16 points right now. So these things don't last forever, but so far spent a lot of time trying to pick the right ones. Missed a couple that really Hovnanian, which we've often had. I just did not get back in, and then I moved up very powerfully. It would have been a terrific buy, but can't complain. Got some really good positions. Oh, I'm wrong. Out of the 6 positions, 1 is down 4 cents. It was at break even just now. And that one still, I think, is going to go very, very much higher. So, okay, got that out the way. Couple of things. Let's go. So, go to the front page, check it out. 50% off my CD. Normally it's $249. It's going to be for half price. I'm throwing in my opening call. You get a $4 extra bonus for that. I'm giving away an extra $4. I don't care. I'm the advocate of the ChapmanWave methodology, and that's, to me, very, very important. So right here on the front page, you've got a whole chunk of things. You've got Tom's white paper on the bull market in Florida housing, Mastering Probability by Steve Rhodes. Fabulous. Go through this. There are so many things that you can get. Now, let's get out of that. So we go, bam, gone. Let's talk about the market. The Dow is up 77 at 13,312. You see, I drew this in. This is the cup formation. These formations repeat over and over and over. They almost like it's like an internal pattern. It's like a fractal that just keeps repeating over and over. But I also mentioned that it's kind of like a gnomon, where the small pattern actually becomes part of a bigger pattern of the same formation. So try to understand these patterns, because they are really powerful. And in this particular instance, the Dow's walked the 9-period moving average. That's that maroon line there. You've got the cup formation. You've got the handle. The handle will break out decisively only if it closes well above 13,329. If it just stalls around the 13,020s to 13,040s, I'd say, hey, got to be a little careful there. It's breaking resistance, but there's still a lot of resistance to the candle, the doji candle of 13,368, high of the 23rd of October. But so far, fabulous action. Stork leg formation. possibly coming. Not the issue. The issue is that it's the psychology of the stalk leg. This is the stalk. Oh, I said it now. I'll have to find it. Let me see. I hope this is the chart. I don't want to spend time on this. There it isn't. 2005. I know 2005. So this is September, October, November, December, January 2009. So that's not good enough. This one doesn't go back to 2005. So that wasn't the one. All right. I don't want to take time. I'll just check one more, see if that one works. Is this the one? I'm just dragging it back to 2005. Nope, it's not the one. All right, I'll find the stalk leg formation. I'll find it during the break, and I'll show it. Meantime, back at the ranch, the Dow's up 89 to 13,324. Now let's do this. So the S&P, if you're looking at the charts based on the Tiger TV, the ones that are on the left, in this case I'm opening up to make it much bigger. I wanted to show the IYT, just before I go to the S&P. The IYT is the Transportation Index. Look at what, I always say that rectangle formations can last a lot longer than your patience. Well, 8609 was the low back in June I think it was, of this year. Of last year. Nope. This year. Oh, this is a daily chart. So it's this year, the 4th of June of 2012. It runs all the way up to the 90s, but it can't get over 95.57. That creates a cup formation that failed, and then it creates a huge, that gray line up the top. Let me see if you can see gray. Yep, both of them look gray. Well, this is gray, and this one's kind of pinky. So this one is gray, and it says that's the resistance. Well, look what happened. There was a lower one down there, a resistance line, and that resistance line was between 93.50, 93.60, 70, something like that. Repelled the price every time. Peak C minus, pulls back. Then it goes to peak A, B, C, D, and a very quick move up, fails underneath the peak C minus, and goes where? To a slightly lower low at 85.83. That's a tad lower than the June 4th low. But it then starts a fantastic rally, and it goes above the 9-period moving average, peak A, peak B. It's in leg C now. And we've just seen in the E-minis, you remember I was talking about the E-minis, that it should, based on the ChapmanWave methodology, if you can get to a C and all the technicals are still strong, there's absolutely no reason why you shouldn't get up. Peak D, leg D. And in the E-minis, there it is, leg D starting right there. So you've got a powerful transportation index. You've got a powerful move up in the S&P March E-minis, but not good enough yet. It's broken the arch formation, so I have to actually get rid of that now, because even if it failed from here, just an arch at this particular point has a different connotation. More likely we're looking at a V-shaped pattern that says the level to watch will be 1452.50, the 18th of October. That's the high that the E-minis could try for. But that's a long way to go. We'll see what happens. So we've got gold down. Gold is down 5 at 16.93. Silver's up at 3 cents. High-grade copper's at 55 cents. And bonds are down 30 seconds. We'll be back. Basil Chapman, 877-927.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Basil Chapman got a couple of questions. One is, would I look at the euro dollar? Certainly will. The other is, I had an email asking me about the bonds and the TLT and the TBT. So let's go one step at a time. I need to look at the TLT. Why? Because it's giving the arch formation, which says the area, it's at 120.83. This is the Lehman 20-year T-bond fund. It says that the area of 120.50 to 120 to 119.80, 119.87. It's going to be very important, because if that breaks, 1805 is going to be really critical. Really critical doesn't even tell half the story. What is really critical is that the right shoulder failure. What is the right shoulder failure? Well, the right shoulder failure, in my CD introducing the ChapmanWave methodology, which you can get. Don't forget those Tiger Dollars. Those Tiger Dollars say that if you spend between $500 and $1,000, you not only get your Tiger Dollars, but you're going to get an extra 25%. It's just a fantastic deal. Plus, you get 5 to 10% from the Salvation Army as a donation that's being given to the Salvation Army in your name. So look at this. So the right shoulder failure pattern, that'll be let me just check, chapter 21, I believe. Yep, right there. Right shoulder failure pattern. And it looks like this. It looks like that. And it fails underneath the previous high and above the low that was just made, as it makes an arch formation that turns into a dreaded H. What does that mean? That you've got exactly that formation right here in the TLT. It's really important, because if that cracks 119.87, it's going to test not only that, but this week is the first time that it's starting to actually trade for 2 days rather than just a brief excursion below the major uptrack channel line. That uptrack channel line is very important, because if it cracks that, it's the first time it's done. It's an intermediate term, a 1.5 year trend line. So if it breaks under that, it says the arch formation is going to pull back. And if that pullback occurs, a close underneath 118.05 says, whoa, be careful. We're into a different kind of pattern altogether. And it says, look at that monthly chart. Remember, you had an alternate count in the ChapmanWave, and you said that there is a high chance that it is a D rather than a C. That'll be a D if it starts to break under the Roman candle of 118.05 of September of this year. So that's a heads up. Now look at the EUR-USD, the euro currency pair. Beautiful. Still has. Yesterday I was talking about, and Friday I was talking about the potential target of 1.3356 in the weekly chart, the 200-period exponential moving average. That's that light green thick trend line over there. But it's been tremendous resistance. But as you get closer, it becomes more familiar, and all of a sudden the magnet, which had been turned around as a repellent, you know, you can turn a magnet, it becomes a repellent, is becoming an attractor. It's becoming to draw the price in. And that's a very important. But it's leg C, and it's underneath the major peak C minus that it failed. So it's very important that the euro daily is produced. Look, there are so many patterns like this. It is the handle and cup, which actually turns out to be a kind of a mini inverted head and shoulders. Yes, I was talking to Rick about this. And it says that the euro is looking very strong, holding the 9-period moving average. The MACD's at 90%. Oh, I did that again. The MACD is very strong, making an M formation. The stochastic is at 90%. That's just real good news. Now, let's take a look. So that means that that's acting very well. USD, JPY, I meant to show for the past 4 or 5 days. I just haven't. Look at this. Peak C after a cup and ChapmanWave cup and ladle breakout pattern. Well, it could be a handle, but it's more like a ladle because it didn't take out that previous high of 82.831. So USD, JPY, Japanese dollar, Japanese yen is looking very strong. And here again, you've got this potential for a ChapmanWave left side, right side. Let me just do that so you know exactly what I'm talking about. I'm going to a very important candle. I choose that candle and I change this color and I make it red because it went down. Then I go click and I go parallel color green because we've got the buy signal going on. And look what happened. This is one bar late. This particular bar breaking it. Beautiful technique. There's another technique that I teach about the inside wedge. Look, you want to know something about the inside wedge? Just look at this. This is what I showed subscribers. This is Apple's 2-minute chart. It went from a top of 540. This is a 2-minute chart. It went from a top at 940 on the 17th at 514.35. It pulls back. Now, you would think that a left side, right side price time match, you can't get it with the low. No, it's not the low that counts. It's particular candles that I look at. So there's a left side, right side price time that goes in a cup and handle failure pattern, and it goes up. Test for 514.37, makes the handle, pops up. And what do I always say about the cup and handle? You always come back and you test the handle. You go into the cup. Well, it did. It went to 510 after round number high. Now it's broken out in the ChapmanWave cup and ladle. I'll be right back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Well, folks, just to finish that thought, and then what happened is that Apple chart, the 2-minute chart, broke out in the cup and ladle breakout pattern. I showed subscribers all these different points in the ChapmanWave cup to left side, right side, price time match, ChapmanWave inside wedge. The inside wedge is so important. How to identify it? The cup and ladle breakout pattern, which is really positive because it takes you to D, E, or F, and then it pulls back. And if it doesn't come back to the left side lip, which would be 517.00, this is a 2-minute chart, of course, very short term. But look how fantastic the short term can give you price rises. And it could go into a sideways consolidation. That's a rectangle formation, which it's doing right now from the peak F top. And there was a round number high at 517, so it pulls back to 510, and now it's gone up to a high today of 526.40. Let me type that in. 526.40. Let's see. So, yep, there's an A to B, maybe C right there. Yeah, there's an inside buy mode. So I just wanted to show the patterns that can formulate just over and over and over again. But most importantly, the question I had on the YCS. Someone was interested in the YCS, which is the This is the ProShares Ultra Short Yen. So it's 200% short the yen. And it's had a fantastic rise. You remember I was looking at the USD JPY, which was doing so fantastically. And so that's the USD JPY. Oops. Wait, that's the yen. Am I right? Yen. Did I get that relationship correct? Yeah, so that's rallying. And we had looked at the FXE yesterday, which is the euro. So that's doing very nicely. Now let's go back to the YCS. And I'm looking at the YCS, and I would say that the YCS weekly chart says, yep, we're going to leg E, very extended, should be pulling back to the 46.82 area in the YCS. That's the ProShares Ultra Short Yen. But the high of 48.47 that goes back to the week of the 23rd of March of this year, that's that cup formation. And lurking out there is that 49.78 green line. That's the 200 period moving average. The stochastics at 96%. The MACD is very good. I suspect that if it powers right through, and I don't know if I can do that right yet because this is a daily chart that's in E, but the weekly chart, which is in a new A, B, C. So it's in leg C, testing the left side high. This is going to be very interesting. Must be short the dollar versus the yen. Yes. So, and that says to me, be careful, because if you want to buy it, it's difficult right now because it's a little extended, but the price point that it wants to go to over a period, not days, of weeks, is at 49.78 areas. It's about another 4 points higher. It might take a little while to do. It depends if it makes the cup and handle, or the cup and ladle that splices, just takes out 48.47 and closes in the 48.90 to the 49.20 area. That'll be really positive. Then it's almost there, in fact. So that's what I'm looking at. So I hope that helps. Now, this is what I wanted to do. In 1892, Tchaikovsky's ballet, The Nutcracker, publicly premiered in St. Petersburg, Russia. Do you know it wasn't a big success at all? And what's even more important about it is it developed. I mean, who knew it would go for thousands and thousands and thousands of performances around the world in the festive Christmas period? Well, the Boston Ballet has just put in a new production. It is the first time in maybe 18 years or more, just a long time, that they've changed the set. We went to see little grandchildren during the Thanksgiving break, and I must say, I enjoyed the sets. I kind of enjoyed them in the first part of the show, but I really enjoyed their sets in the second part of the show. The colors were vivid and bright. It was vibrant. It was really exciting. Dancing was good. Just a fun thing. It's still going on until I think the 24th or 6th or something, I'm not sure. Anyways, you have the Boston area, the Boston Ballet does the Nutcracker every year. I just want to mention that because today is the birthday from 1892. Now, there's something else. I went to see Lincoln. My wife and I went on this weekend, the movie. And he went to see him. Actually, he was not there, but we went to the movie instead. In 1865, the 13th Amendment to the Constitution abolishing slavery was declared in effect by Secretary of State William H. Seward. You know, it is a Hollywood movie. The moment I saw John Williams' music, I have great respect for music, for John Williams. There's a fantastic, he's written a clarinet, basically a clarinet concerto as like a tribute and ode to a woman who was dying, who was his principal clarinet in the orchestra that he always put together for all his pieces in Las Vegas. I'm sorry, in LA, and so he wrote this incredible piece. It's called The Terminal. And the music is just beautiful. It just has this clarinet theme going over and over in different forms, but it's like a clarinet concerto. And she played it as a tribute to the late, I think her name's Bernstein. Just beautiful playing, just beautiful writing, beautiful playing. Anyway, once I saw John Williams' name there, I thought, oh man, Hollywood, here we come. Well, it really was a Hollywood, Lincoln, but it was really good. A lot of words. I could have done without the name characters, the people, Tommy Lee Jones, the people that you recognize. It would have been actually fun to have people that you've never heard of before do fantastic performances. I can't remember the guy's name who does Lincoln. He did a great job as far as I'm concerned. Going through the history of Lincoln, it's very interesting that there are a number of, well, I'll talk about that. Let's talk about the market. We'll talk about it over the coming days. And Joe says, I love The Terminal. Great movie. Well, you know what? I kind of fell asleep when my wife, when we rented it many years ago, maybe 4 years ago, 4 years ago. And I woke up just as the music was playing at the end. I thought, wow, this is fantastic. And I played the music over and over. My daughter bought me the CD as a present. And so I don't know if I've actually seen the movie. She enjoyed it. So, okay, let's get back to it. Now, Javo wants to know, what about the IWM? IWM is in leg D up in the ChapmanWave. Look at this methodology. This is what you can learn from the CD. How to identify the entry point. How you can follow the technicals, the stochastic and the MACD. How you can use a particular pattern to go from a low bar, in this case the IWM, made almost an exact left side, right side price time match from the peak F top at 86.96 on the 14th of September. And it comes down where? It comes down to 76.13. 76.13 happens to be the low. 76.22 was the low of the 24th of July. So it comes down 6 cents lower. It holds above it, and then it powers high, which says that if you have a successful arch formation, left side, Daniel Day, thank you. If you have a left side tests on the right side of that low, but you don't close below it, you close above it, but you have taken it out. It says you can rally to the previous peak, and then you got to be real careful. You shouldn't cross that peak. But if you do, and the technicals are strong, that is a powerful move. So 82.95 was the high on the 2nd of November. That was the last arch. That was that right shoulder failure, or the dreaded H failure. You can see there's a dreaded H. There's another one. There's another one. What's the dreaded H? In my CD introducing the ChapmanWave methodology, we can go to the dreaded H, chapter 17, right there. I'll just do a quick scroll down there. These patterns repeat over and over, the scallop formation, that arch formation that looks like an H. Now what happens is, at a certain point, you can come down and test it, and you can make a much larger H, or you can just break out. Well, what's happened is the IWM went to peak A on the 29th of November at 82.41. 82.40. Oh, I call that a phantom peak. So this is actually, technically, this is leg C, but using the ChapmanWave methodology, I always like to get there a little ahead if it's absolutely legitimate within the technique. I use these two parallel high bars and a breakout, the high bars of the 29th of November, the 30th of November, and then the 3rd of December, the breakout to 82.76, as phantom peak A, peak B, peak C, and we're in leg D. Technically, it should only be C, but I want to be a little ahead of the game. I also want to be parallel, if I can, legitimately, with the other techniques, because look, the S&P, SPX, is in leg D, going to leg E right now. The Dow was at peak E. It hasn't gone to peak F. That might recycle. They could very well recycle, but above 13,329.44. 3,229. We've 3,329. Wow, we're missing it by just a point and a half. Days young, 13,329. Yeah, we're missing by maybe 2 points. So when we look at this particular pattern, the stochastic is at 75% in the Dow daily, but the MACD is still very strong in the daily chart. So let's get back to the IWM. The question is, what are we doing? Well, this is a powerful leg up. It's taken out the left side arch high, which was at 82.95. The next one to tackle will be the one at 84.15. We've gone to 84.42. Doesn't have to close above there. It's just close. Once it pierces it, it says, hey, this is a strong move. The 120-minute chart is making what could turn out to be 82.11, 82.15, 82.12. Yeah, this is A. This is peak A. Wow. This is peak A, B, C. We're in leg D at a new recovery high in a pattern that I call the ChapmanWave cup and right there. Ladle, breakout. Oh, we don't know yet. It needs another bar to confirm, because if it comes back and closes under 83.80, that could be a testing of the cup formation. So this is looking really good. I love the action. So, and now let me show you something that's interesting. In my webinar the other day, what I was showing is the inverse. Some people are really good at going long. Or they're really good at going short. For instance, you might notice that some people constantly go short, and they do a pretty darn good job. They just have a feel for going short. Other people have a real feel for always being long. When they go short, they prefer to go short via the inverse. Well, have a look at this. The DXD right now is at trough D was 46.44. This is a 200% short the Dow. 46.41. This is now leg E to the downside after an E minus, a little cup formation that failed. So the day is young, so I can't, whoops, I put an A, should have been an E. I can't tell you that it's closed there. If it closes above this low bar of the 12th, 46.44, that might turn into a successful test, because you've got a slight divergence between the rising stochastic and the falling price. And there's a left side, right side price time match. I'm going to move it over a little bit because it doesn't make any sense if it hasn't gotten there. To that candle there, the doji candle. And that takes it to, tomorrow. All right, till tomorrow. That it can break, and it'll test the candle, this doji candle of 45.57 on the 18th of October. Hey, wait a minute. What about the SDS? Same thing. Leg E to the downside, about to test the most important candle, the doji candle of 52.58 low of the 18th of October. Oh, whoa, wait a minute. What's the inverse of the IWM? Is that the TNA, TZA? I think it's the TZA. I hardly ever trade these. We trade others, doubles we do, but the triple, the small cap, three. We don't trade three times. I'll get into it when I get my major sell signal. I'll absolutely want to go three times to the short side, but I haven't got it yet. So now the TZA is testing the left side. You realize the IWM is one of the stronger indexes. Now look at this. TZA is small cap bear, 3 times shares. 13.35 was the low on the 14th of September. 13.87 is the low so far today. So there's a left side, right side price time match. There's a trend line that can go right there. Oops, that's not right. Yeah, they're right there. And then there's a brand new base that would be built right there. And that particular one, I would have to go to that candle. I'd go to the same place, right there. Go to the right, new parallel, and that takes me right to there. Okay, and that says by the 20th, we could be testing that low bar of 1335. We're getting real close to some. See, I'm getting a little concerned here. We have 6 longs. So far today, the short that I want is not getting there. It's not getting there. I do not want to go into this phase right now without some protection to the downside. I keep saying that we've got all these longs that are working out beautifully, but I have to tell you, we've got one long now that's up 21 points. But that's not the issue. The issue is I must have protection to the downside, and I don't like to have more than 6 positions. Basil Chapman, we've got callers on the line. I'm sorry, callers, we're going to get right to you. We've got Mark and Mike. We'll be right back, and we're talking about CMG and GLD. Oh, good picks. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. And let's see. Would you please take note? I missed that. All right. Well, I'll have to ask my engineer that. He asked me something. Okay, I will do that. So let's get back to this question I have right now. We've got Mark in Fort Collins. Hi, Mark. How are you doing?
Good, Basil. How are you?
I'm very well, thank you. You want to look at CMG?
Yeah, I've shorted this successfully a couple times, and it looks like it's getting back up into a possible short range. What do you think?
I agree. I wouldn't do anything just yet. My thinking about this is, and this is one of the reasons why I've kind of laid off wanting to short the restaurant area. This is the holiday period. This is where people go out to have food. So I suspect that going into this period, maybe another week or so, I'm watching CMG, which is Chipotle, Mexican Grill, made a high of 442.40. It opened at 417 that month. That was a doji candle that gave a really great signal for a decline. So my thinking here is 306 would be the 9-period moving average of the monthly. Let's see. I'm looking, you know what I'm really looking at? In the daily chart, the 200-period moving average was, and I mentioned this in my opening call, we missed it. It was upsetting. We had the fantastic move down, and we could have got it a second time when it hit 351.80 on the 17th of September, right on peak T at the 200-period moving average, and I correctly identified the ChapmanWave Phantom Peak, the bar, 2 bars before. It was just perfect. Well, that's history over the dam. What a history, whatever it is. Water over the dam. So now I'm looking at the chance that 298 to 306. I don't think it's going to get to 316, the 200-period moving average in the daily. So I'm looking at this. I'm looking at peak deep, but the MACD's at 89%. The MACD's strong. Stochastics at 89%. I would give it just a little bit. I'm going to make a suggestion because I know that you know how to handle this very well. If there is a pop-up, and the pop-up, the high today is 295.53. 296 to 297, round number 297, on the 15th of October. If it gets really close to 296, between 296 and 295.50 to 297.30, if you want to start a small position right there, I think that's a great opportunity to give it the test to see if it's going to pull back. So I hope that helps you. But I'll be watching it real closely.
Okay.
Thank you very much for calling. Let's go. We've got a brief moment. You're going to go to Mike in New York. Hi, Mike. How are you doing?
Good. Basil, did you sell your stockpile of gold? Because it seems to be plunging now, and I was wondering if that's...
to tell you the truth,
something bad's going on out there.
I have the DZZ, and I've held it for a while. I keep wanting to put it in my opening call, and I always feel uncomfortable with the $4 something stock or $3.90, whatever it was at the time, because the percentage is so big. If you make a mistake, I just didn't want that risk. I'm prepared to take the risk. I didn't want to give subscribers the risk, but that seems to me the place to be, because the gold right now is the GLD is at 162.21, down 224. I feel. Gold is pulling back. It's saying, hey, there's no fiscal crisis. The bonds are pulling back really sharply. I'm looking at this and I'm saying, maybe these guys for once are going to get something together, and we will get one day where everything falls apart. But mostly, it looks to me like gold is saying, hey, don't get too carried away. The monthly chart is making the H that turns into an M pattern. If the GLD closes under 161, if it goes to the 150s at any point in the next 3 to 5 sessions, my weekly says, hey, it's done. It's done. It can have rallies, but it's confirmed lower highs and lower lows. So I hope that helps you.
Okay. Right,
Thank you so much for calling. I appreciate it. That's Mike in New York. Folks, go to the front page. Check it out. Look, there it is. I'll give it to you one more time. There it is. That is my right there. Save 50% on Basil's CD book. Also, you've got your Tiger Dollars to use. Today's the last day for Tiger Dollars. It's not the last day for my CD, though. You get a fantastic deal. Check it out, and I will help you. Thanks for being here.
Are you looking for